Welcome back to Rich Dad StockCast. I'm your host, Denney, and today we're tackling a question investors everywhere are asking right now. What AI stock should I buy? Now, artificial intelligence is transforming industries from software to healthcare to robotics. Some companies are exploding in value, and many investors feel like they might be missing the biggest technology wave since the internet. But here's the problem. Chasing headlines and buying hype rarely ends well. So today we're breaking down how smart investors evaluate AI stocks, what separates real opportunity from speculation. And joining me is Rich Dad expert Andy Tanner, who helps investors look beyond the noise and focus on fundamentals, cash flow, and risk management. And before we dive in, go to stockcastbonus.com. Grab your free investing tools. If you want to invest with structure instead of emotion, that's where you start. Andy, welcome back.
This is great, Del. This is fantastic. You know, I recently put out an ebook about AI, and I also did a 2-hour class on AI. So I don't know that we can put it in the description, but if people go, I don't know, if they go to the Cashflow Academy or, stockcastbonus.com and get on our list or whatever, they'll find out about those resources as well. So this will be a great primer for that because it's something that the student body has asked for. Absolutely where my attention is, 100%. I mean, I'm locked in on the opportunities and the risks of AI for sure. It's where I do most of my study. I spend most of my time learning, and that's definitely the topic right now for sure. AI. I spend way too much time with it.
It's a fun topic right now, very pertinent. Now, let's start with the question everyone is asking. What AI stocks should I buy? But maybe the better question is, how should investors think about this in the first place?
Yeah, I mean, the advice culture, I love that question because it's such a great opportunity to separate the amateurs from the pros. The advice culture is really just a lazy culture. I don't want to learn anything. I don't want to do any work. I don't really want to learn about that stuff. But can you give me a tip? Can you just tell me what to buy and shortcut it for me? And it really is. It's kind of like, if you took that mentality in any other realm, look, I just want some tips on playing the piano. I really don't want to take the lessons. I really don't want to practice. I would like to have the concert pianist ability and the rewards. Could you shortcut all that learning and work for me and personal development? Because I just want to go to the recital and play. I really don't want to learn the piano or even how to read notes. I just want to be Billy Joel. Is that cool? I mean, that's asinine. And yet that is exactly like when I would, when you go to the Rich Dad radio show with Robert, and the Ask Robert section that he would do, and people say, "Hey, if I had $10,000, what'd you buy right now?" That's exactly that attitude of wanting a tip, and that's the advice culture, and that's why Wall Street's rich, because they'll tell you exactly what to buy. It's always mediocre, and they'll charge you a fee for that advice. And they love that ignorance. So when people say, what AI stock should I buy? I say, well, take your chances. And by the way, it could change. I could be wrong. I could pick one and I could be wrong. So what do you do if you're wrong? Because I'm wrong sometimes. And the ability to know how to deal with being wrong is a huge asset. So I liked your second question is, how should I think about it? See, now you're asking an education question. So I like to delineate that right out of we should delineate that right out of the gate.
I think it's important because instead of just say, hey, buy 5,000 shares of XYZ, I think it's important to do that, right?
What more do I know now? Should I buy gold? Yes. What do you know about gold now? Nothing. Should I buy gold? No, not now. What do you know about gold? Nothing. But if you say, gold's fungible, what does that mean? Now we know more about gold than we did before.
I like that.
Same with AI stocks.
Now
so I can talk about how to think about it if you want. I love that question. How do you think about it?
Well, that's a good, how about we do this? The first part of this, let's think about it. Then let's get into some maybe technicals, if we will. So the thought of thinking about it, why do professional investors focus on process before the picks?
Well, I think that, I don't know. We study a lot of generalized principles. I don't know that process is a generalized principle, but it in my life, it seems to be that I can't always control outcomes, but I can definitely define and engage in my process. And risk is about control, right? And the more control I have on my process, that probably leads to less risk. More control is less risk. So when my sons decide to be athletes and basketball players, we really didn't focus on whether we'd start, whether we'd even make the team, whether we get a scholarship. We wanted all of those things, but those were out of our control. What was in our control, how tall am I going to grow, right? Am I going to be quicker than the other guy? What I can control is my nutrition, my weights, my agility, my skill level, my basketball IQ. Those are all within my control. So we engaged in processes to improve those. So as an investor, I would think about it that way in the process. So, one of the, for example, part of the process of an AI would be Warren Buffett's process. He says, where's the moat? Right? Where's the moat? Which one of these can withstand assaults to the castle? I want a deep moat. I want a wide moat. I want a huge castle that's well managed. But I want sharks in that moat and alligators and depth and waves and lava. And I want a great moat. So when I look at AI, it says, where's the moat? What is going away, and what is vulnerable? What is vulnerable? I'll tell you what I think is vulnerable is labor.
Let's hear.
Labor's free. Labor's electricity. Labor is going to the trend. If you look at the trend, and I look at trends, the trend is exactly what Buckminster Fuller said. It's you ephemeralize, and you start doing more with less, and more with less and less, and more with less and less and less, till pretty soon you hit a point of infinity where you do everything with nothing. That's infinite return. So the leverage that it offers is pretty soon there will be no human task that cannot be reduced to energy and maintenance. You have some automatic apparatus that needs to be maintained, just like a human does. Humans need, sick leave, and humans need food, and, humans need bathing and showers and clothing. We have human needs. Okay, well, robots have need too. They need electricity, and they need maintenance. And that's always going to be cheaper than a human in the long term. So essentially that's free labor. You get solar or whatever from sunshine, and there you have it. You have free energy. The sun gives you free energy. And then you have a cost of maintenance. And even that gets better with time. So essentially, whether it's 1 year, 5 years, 10 years, whatever, I see the weakest moat, the moat that isn't going to hold is labor, human labor. It's going to be free. So what does that mean for shares? Well, it means that ownership just got way more powerful. If you have a currency that's losing value and the moat of the currency is dying, the currency can be attacked and it can lose value, like the Zimbabwe dollar. When that goes away, people find, okay, what is valuable? Well, if labor goes away, ownership increases. And there's a tipping point where you have hyperinflation, where all of a sudden the confidence, what the difference between inflation and hyperinflation is confidence. As soon as, people can have inflation, but they still have confidence in the dollar because they'll earn them. The tipping point happens where people say, wait, these dollars aren't good. I don't want them anymore. I don't want to do that anymore. And then that's when it accelerates where people really don't want it. And the next thing you know, well, what do I want? So, it's kind of funny. People say, well, I want to get out of the rat race. The rat race is automated now. They don't need you in the rat race. Rat race is going away. There are people that pray they can get the rat race now. Oh, I want to get out of the rat race. Oh, you're getting out. We're all getting out if we're in the rat race. We're all getting out because that's going to be electricity and automation. It's going to be free. Now, people don't want to hear that because people are taste buds, not brain cells. They'll reject that idea simply because it makes them uncomfortable. That's the only reason. Oh, it tastes like broccoli. Must be bad. No, it's nutritious. It's good. Well, I only want to eat ice cream. Only tell me things I want to hear, Andy. That's what clickbait is, right? Only tell me stuff I want to hear. The algorithm to turn this off because I don't want to hear that, right? Well, that's fine. But all of a sudden, what happens when people see the limited amount of float? What happens when you see Salesforce lay off 4,000 people, job shrink, but buy back, $20 billion worth of shares, total of 50, ultimately? That means the amount of shares available shrink, and the thing that's the most valuable is getting more scarce. So that's the way I think about AI. Anyone that's followed me has noticed I've always been cautiously bullish and very conservative. And Tom Wheelwright noticed he was at an event. He invited me and he'd be on a panel. And I said, it's the biggest boom mankind's ever seen. It's going to make the dot-com boom, maybe a little bust, but ultimately it's a boom, like Google boomed, Apple boomed, Netflix boomed, Microsoft boomed. It's going to make that look like a birthday party, man. Tiny. It's going to be massively bigger party than a birthday party. It's going to be a rave, man. It's going to be crazy. It's going to be Studio 54 party, man, because I'm not going to sell. And the institutions aren't going to sell. Salesforce is pulling them out of the float. They're not going to sell. So all of a sudden, you don't have a way to make money by labor, and the way to make money by ownership is more and more expensive because it's in demand. So I think the value of owning a business. So go start a business. Yeah, go compete with 300 million Americans to start your own business. Everyone's starting their own business. Or just go, hey, you know what? I'm going to team up with the late Steve Jobs, and I'm just going to own his business and let him share profits with me. That's how I think about AI.
I love that.
Broadly. Now, we can get into specific. Now, I don't mind giving out specific stocks either. I don't mind that. We can do that in the second half if you want. If people want advice, well, that's probably stupid. They're not going to learn anything. But I'm happy to tell them I'm happy to tell people what I'm buying. Absolutely, I'll tell people what I'm buying.
All right, that's a great cliffhanger. Let's go to break real quick. When we come back, Andy's going to break down how smart investors position themselves during this technology revolution, this Studio 54, if you will. I love that little call out there. And don't forget, go to StockCastBonus.com, download your free investing tools. These resources are designed to help you to analyze stocks with discipline and clarity. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad StockCast. Andy, let's talk strategy. AI being one of the most important technology shifts in our lifetime, but investors still need discipline. We've talked about that. We need education. So my question is, how can investors prepare for this AI boom that's coming? Is it, you said, I'll give them stocks, or is it the pick and shovel Levi Strauss trade? How should we be thinking right now going into this?
Yeah, I mean, you shouldn't invest in things you don't understand. That's another reason the advice culture. So, it's like that flight I always talk about where I'm going from Salt Lake to Atlanta, and I sit down, get all set in my first class seat, and I get my Bose headphones, those noise canceling ones. I get them like right here, almost there. And the guy next to me wants to chat. He wants to chat. He wants to get to know me. And actually, he wants me to get to know him. So he's a thoracic surgeon. And I just happened to have a flight for 4 hours with the greatest thoracic surgeon in history, the best in the world ever. And the reason I know that is he told me for 4 hours that he was the best. And so I'm listening to all the stuff in the school and how complex it is and how hard it is to, replace the bicuspid valve and all this crap forever. And I'm just, I put the headphones down. They're not, and I'm just, my neck's kinked because I'm. And then the pilot says, we're coming into Atlanta. And he goes, so it looks like flight. So he says, so what do you do? And I go, well, I teach investing and do a little investing. He goes, oh, like stocks and stuff? I go, yeah. He goes, hey, I really not interested in learning a lot about that, but do you have any good tips for me? I'm always looking for a good tip. And I almost said this. I said, it's interesting you said, because I really didn't want to do all that BS you just said, but I sure like to replace my own bicuspid valve on my kitchen table with a butter knife tonight. You got anything? I mean, the disrespect. He demanded my respect for all his education. He gave no respect to you and I or our listeners for our education. Oh, well, I don't really need that. I just need the tip. Just need the tip. Just don't need to learn anything. Just give me the tip. Can you give me a tip on how to replace a heart valve? Well, go to school first. So how can people prepare? There's no putting on the seatbelt when the auto accident happens. There's no getting on the plane after it's taken off. The prime to prepare, what, you're going to learn how to do options overnight. You can ask Chat GPT how to do it. He doesn't know how to do it. So preparing is the first step. Is, look, I'm a financial education advocate. Learn, increase the time spent with your mentors now, and paper trade or learn real estate or learn business. I don't care what you do, but learn so when this thing goes pop, you're ready and waiting, and you're not, there's three types of people that make it happen, participate, making it happen. People that watch the other people do it, they don't get anything. And then there's the people who have no idea we're even having this conversation. They're just so tuned out. They have no idea what's going on. They don't even know what's coming. So decide where you want to be. If you want to be a participant in making it happen for you, start learning with urgency like you've never felt before. I'm so glad for the assets that I have. Robert, thank you. Do you know they gave him the best honor ever? They gave him a veteran award, and I was talking to Tom, and he might be the most successful Marine ever. I'm trying to think of someone who was a Marine that did more for the world after his time. Talk about a guy that deserves to have that award. And I'm just grateful because I've been imperfect, man. I've made mistakes and lost money here and there and all this. But when I look at what is standing in the moat around it, I'm like, man, I'm sure glad going into this next phase that there's some ownership there, man. I'm really, really grateful. And to think how that can explode, like gold has, like he told me to buy all this gold, and I'm like, oh my gosh, look at gold right now. So I'm grateful that I was prepared, and I want to prepare more. You can feel the urgency in my voice. I want to get better.
Indeed. I've never felt so much urgency. We've known each other for 2 decades, which is crazy to think about, but this urgency of getting prepared for this AI shift. I mean, this is just
big, man.
It's going to be huge.
It's big.
What else can we do to fortify ourselves?
Stocks. Yeah, let's talk stocks. Look, I'll just tell you what I'm buying. That's what people are. Well, you want advice? Well, I might change. I might be out of these tomorrow if things change. So you can go out and buy them in ignorance. And when I see something change and I do a protective put or change something or hedge, you can watch your stock go down while I react to a mistake or to just change. So the education is invaluable because I don't have the ability to predict where things are going. I'm going to go through criteria and give my best thoughts to it. But without exit strategy and hedging and knowing how to do that, that's why I worry about giving out names, because someone buys it, things change that I didn't see coming, which is human. I'll know how to react to that. I'll know how to hedge that. I'll know how to react to that. They won't. So that's why I don't like giving out stuff. But I'll tell you a couple. So you mentioned the Levi Strauss type trade. So what is the Levi Strauss trade? I'll let you say it. You teach it for a minute. I'll get a drink here and refill my cup. My producer says, Andy, I hate having plastic. He says, always use your mug because it looks better, but I'm out. So I got to refill my mug here. So
all right.
What's the Levi Strauss trade?
The Levi Strauss, if you do your little Google search on Levi Strauss, you might think of Levi's and the blue jeans. He made his money during the gold rush, during the, I think, 1849 gold rush. And he didn't make it in gold. That's where everybody went to. They went to San Francisco and California to buy gold. But the money wasn't in the gold. It was in selling the picks and the shovels and the blue jeans to the people that were going after the gold. And that's where Levi Strauss truly made his fortune, was in selling picks and shovels, not the gold itself. So that's a little context on Levi Strauss.
So you're basically saying, what are the tools and clothing that the gold miners need. So instead of talking about AI, we take a step back and we say, well, what are the AI guys going to need as they go for all this AI profit? So as you look at Anthropic and Google and Apple, all these other Gemini, you look at all these, what are they going to buy? Where are they absolutely going to spend money? Where are they? Like the gold miners were absolutely going to buy pick, absolutely buy a pair of blue jeans, absolutely buy a shovel. They're going to buy them. So Levi Strauss says, I'll sell them the blue jeans, because whether they find the gold or not, I don't really care which miner finds the gold. Some will find it, some won't, but they all need blue jeans. That's his thought. Well, I've got 3 or 4 right there. God, I don't know how long it's been. It's probably over a year ago. I'll bet it might be 2 years ago. I don't remember what it was. But I was talking with Corey Halliday, one of our major mentors, about the Levi Strauss trade. And the biggest bottleneck in AI right now, by far, the biggest bottleneck isn't chips. It's not software. It's not hardware. It's 2 things. Number one, it's energy. It's energy. Google 3 Mile Island and just see what Microsoft is doing with those guys that have 3 Mile Island. They're opening it up. They're going to reopen that thing nuclear. They got to go nuclear. We're talking data centers that take the amount of electricity of a small city. They got to go nuclear. So one of the things I bought is a company called Cameco, because they sell uranium. So that's a Levi Strauss trade. It's done very well. I really don't care, though, about the price. The price gone up like crazy. But I'm not here to say, oh, yeah, look, I bought this low and that's high, because I'm not going to sell it. It is meaningless that it has gone up. What's meaningful is that I can get a dividend from it forever, and I can write options on it forever, and I can cash flow that asset, and I can have new refrigerator money rather than old pantry money. I'm not selling it. I'm not selling it. The biggest regret I have is I didn't buy more. It's always the biggest regret that you didn't buy more. I'm not going to sell it. I'm not going to say, oh, it's up now. Now it's time to sell. No. So that's one. Energy. So Cameco's good. And by the way, I also have, I enjoy looking at utilities. People pay the phone bill and people pay the electric bill. So energy, particularly nuclear energy. I just said like George Bush. Nuke energy is a big one. Okay. Another stock that I really like, and it's kind of all over the place, and its dividend moves around, but the spreads on the options aren't the best I've seen. So, you weigh that, but what I like about them is I think they got a decent moat. I don't think they're going anywhere. Got a friend who's in construction. His company just went public, by the way. And, they're building a data center. They're building a data center for Apple or for one of the big ones. And I can't remember what the figure was from him, but my wife, she used to work for a company in Kelton, Georgia called Southwire when we were first married. She was a receptionist for Southwire, and they make wire. They make copper wire. They also had who the heck was it? It was chip maker.
NVIDIA?
I can't remember the name. No, they were in Lehigh. Micron. And these are the orders for the wire. The orders for the wire for tech places, and particularly data centers, the wire, it's in the hundreds of millions of dollars. So just like the gold rush guys are going to spend, $20 on a pick, the AI rush miners are going to spend hundreds of millions of dollars on copper wire. So I have a company called Rio Tinto. They mostly sell steel, which data center structurally, or iron rather. But what they also have the largest open pit copper mine in the world. A place used to be called Kennecott Copper. You can see it from the moon. You put the Empire State Building in this thing. They literally had the faith to move a mountain shovel by shovel. And in my lifetime, I've seen them literally move an entire mountain. Where I live in the Salt Lake Valley, it's enormous. They've named a town out there called Coppertown, Copper Hills High School. The hills are made of copper. It's unbelievable. So I really think that if you're going to do AI, you're going to need energy. And to transfer that energy into whatever you're building, you're going to need copper. So I really like the copper. Those are the type of Levi, we could go on, but those are the type of Levi Strauss trades that I really like right now. And they're not really trades, they're investments. And I think there's a lot of upside to them. I think there's a good moat to that stuff. I think that we'll need more and more and more and more and more and more and more of it, just like we always need more chips. We'll need more energy. For sure, we're going to need more energy. For freaking sure, we're going to need more energy. And absolutely, we'll be wiring stuff up like never before as we automate, because that's what the labor is. It's electricity and maintenance. That's what it is. So you got to channel out. So I like those two for Levi Strauss trade. Now, am I right? We'll find out. But that's what I'm doing in the Levi Strauss. There's a couple others, but that's good enough for that.
That's fantastic. All right. My final question is this. If someone that's listening wants to start learning how to evaluate AI stocks the right way.
Final question. I had like three more, but that's okay.
We're gonna have to save that. We're gonna have to save it for
we'll
another
save it for next time, man. That was just the Levi Strauss section. I got a lot of more. We'll do another podcast because there's a whole lot. Like that's not the big part of it, man. So, but I think what was valuable is the thinking of it, right? How do you think about it? And hopefully there's some benefit to thinking about it where you'll say, and you'll come up with ideas as a listener. So that's awesome. So, okay, final question. What do you got for me?
Final question. What's the first step somebody should take to increase the way that they think about these AI stocks?
Well, there's a number of first steps. Mentors is a good step. Talking to people and getting to know people that know more about it than I do or you do, than the listener does. Always StockCastBonus.com. Pick up your free stuff. Start learning. Get with us. A great first step. If someone just wanted to watch this, picture and imagine this. What if you could just go to like Kenny McElroy's office and you weren't allowed to say anything to him, but you could just sit and watch what he does all day and see who he calls and who he meets with and what deals come across his desk and which one he says no and which one he says yes. This brochure's too thick. It's this crappy deal. This one's clean, financials. This is good. Wouldn't it be cool just to watch a guy that's got, a couple $1 billion in real estate under his belt, or someone like Than or someone like Buffett, right? So one of the great first step, if you want to really watch how this does, we have an immersion program. It's not a class. It's an immersion. It's like if you want to speak Japanese, fly to Tokyo and move in and just hang out with the people that speak Japanese and, you'll be speaking Japanese. I really think so, right? And so we have this mentor club. It's inexpensive. It doesn't cost a lot. And you can watch once a week. We do a trading session. We record it and we put it out. So it's like watching the screen of a guy that's done this more than like in thousands and thousands and thousands of times he's done it. It's not new. So a new guy gets to watch, or gal gets to watch a guy who's done it 1,000 million times. And that's a killer first step to start, is just start watching what it looks like to find these assets, make the decisions, hedge them, exit strategy them, risk manage them. So any of those things, get a mentor, go to StockCastBonus.com, start learning, get in the mentor club, all of these things, but I'll tell you the step that not to take is to do nothing and to go let's go get some more content. Let's upgrade our content from scrolling, 5-second TikToks, and let's get relationships. Let's get people that we can ask questions to. Let's get feedback. Let's get serious. So those are so any number of those first steps would be great ones for whatever you're inclined to do. But the worst thing a person can do is nothing. That would be a horrible first step, is a no step.
I couldn't agree more. Thank you, Andy. Listener, artificial intelligence may reshape the global economy, but smart investing still comes down to fundamentals, discipline, and education. And again, big thank you to Andy Tanner for helping us separate opportunity from hype. If you want to become a smarter investor and learn how to evaluate opportunities like AI the right way, go to StockCastBonus.com right now. You'll find free tools and resources designed to help you to build real investing confidence. And if you've got value from today's episode, make sure you like it, subscribe, share it with someone who's trying to figure out AI for themselves. You're not here by accident. You're building something that most people won't. So stay smart, stay invested, and we'll see you next time.
Thanks, Del.
This podcast is a presentation of Rich Dad Media Network.